Okay, we're going to go ahead and get started. Just a few things here. Today's training is going to be done by Judd Blakesley. The discussion is going to focus around refinance and the different options that are there. We know we advertised this as a joint presentation with Judd and Tyler Healy. Unfortunately, Tyler's not able to join us. So those of you that join just to see Tyler, you'll just have to deal with Judd today. Or I guess you could conceivably hop off, but we'd really encourage you to stick around to hear what Judd has to offer today. So this is being recorded. It will be posted to our YouTube channel, and the link will be shared with everybody so you can share it inside of your institutions. But with that, looks like we've got a good group here that has joined. So Judd, take it away on the subject of refinance.
Hey, thanks, Danny. Yeah, classic bait and switch with teasing Tyler as a host. He chose Disneyland over 504 refi. Welcome, everyone. Thank you. Thanks for the intro, Danny. So this is the best topic you could have on a Thursday morning. So thank you for choosing SBA 504s over any other option you may have had. I'm going to share my screen with you. We're going to hop right in to SBA 504s refinance. So refinance this is a moment on the 504 side that I feel like it took years to get to. In the recession, the SBA came with a short-term refinance option to help with loans right then, and then it had a quick sunset date, and then it took like 5 more years to get anything back. But when it did come back, it became a permanent part of the 504. Here is your presenter, me, with my Pit Vipers. I've been in with Mountain West since 2005. I spent a couple of years in California, also working for a CDC Small Business Finance, until my talents were needed back in Utah. Today's discussion, there's 2 things: debt refinance without expansion and debt refinance with expansion. So that might seem a little bit crazy that SBA would just not have one category of refinance, but in the world of SBA, the actual program gets approved by Congress. And so at first, the refinance with expansion was approved, and they just said, okay, if you're adding another building, if you're adding on, if you're doing improvements, we'll let you add some refinance. So that was our first teaser into the world of refinance. And then the SBA came and officially made debt refinance without expansion. Each have their own separate rules because they're approved at different times. So this is solely to help you see what those 2 options are when it comes to refinance. And then you'll know when we structure a deal or talk through it with you why there may be a few slightly different rules depending on the project. The biggest thing that we felt like was the win was cash back with the project. SBA does not technically like the term cash back when refinancing. They want to know that money is going back to improving the economy and helping the business. So we'll refer to it as eligible business expenses, but that's cash back. Any borrower that comes to you as a lender or a real estate agent, and they're saying, they'd like to tap into their equity or refinance their loan and maybe pull some money out, SBA has okayed that, but they have some limits on what they'll do. The first is if there's cash back, we can do cash back up to 20% of the appraised value. So that's the most you can get. And you'll see that referenced here a few times. If you do cash back, then the maximum loan to value, or the highest we can go, is 85% of the appraisal. So if there's even 5% of the project in cash back, we just have to make sure there's 15% equity. So that's SBA's counterbalance. Essentially, if they're looking for cash back, we'll go and look, and SBA allows us to tap that in and show for the last 8 or future 18 months, project out what that money would be used for. And so we do that, it's on our side. But what you can talk to your borrowers about is, yes, they can work into their equity and pull some money out. The basics. So if there's no cash out, like a new 504, if someone's buying a building, the down payment is 10%. So with a refinance, we just have to show there's at least 10% equity in the property. And for a while, the rule was a loan had to be in place for 2 years. And now that's been switched to 6 months. And so you'll see the two loan to value requirements we bump up against. Again, 90% loan to value if there's no cash out, 85% if there is cash out. There's a rule, and this is something we'll talk to you about as we refinance a project. SBA wants to know that the loan was for land, building, equipment. So they say that, you know, those are the eligible project costs. The 85% rule is the SBA understands that loans were not all created for the 504. And so they may have included working capital, inventory, but essentially up to 15% could be used for something that isn't typically eligible for a 504. So we work with you to get a copy of the note that we're paying off, the trustee mortgage, those documents that would confirm what that loan was used for. The key thing to look on these bullet points are some of the changes SBA made through the stimulus bill this last year. They dropped it, so a loan only has to be on the books for 6 months. And so that's made so many more projects eligible where we don't have to wait that 2-year period that we did before. And so going through those, the debt that's also eligible that we've really been enjoying is SBA or government debt. So a 504 can now be refinanced into another 504, and an SBA 7A can also be refinanced into a 504. Here's an example. The most common is just someone comes to you looking to refinance. And if you're a lender, you would look at your own internal options with if your bank or credit union. The other option would be is an SBA option. For us, the appraisal ultimately is what would dictate what you can do with it. But here's an example of a cash out. So this would be a borrower that owns their building, they're occupying the space, and they're looking to refinance, and they owe $2,100,000. So 2.1 million on the building, and technically they could get up to 20% cash back if the appraisal allows for it or provides enough equity. And that would be 600,000. You look on this example, they just want to pull out 450,000. So it appraises for 3 million. That gives us equity of 450,000. So that satisfies SBA's 15% rule. And so long term, a lender, you'd have 1,350,000 for your portion. SBA maxes out at 40% of a project. And so that'd be 1,200,000 with the borrower's equity of 450,000. So the down payment requirement is met. Okay, if it's an SBA 504, government debt. For a long time, this was not eligible. And so we just say, sorry, if you're an SBA loan, you're just kind of stuck there. And now, for a long time, it was a variable rate loan that we would get called on the most because the SBA 504 is a 25-year fixed rate. So it's amortized term, amortization's all 25 years fixed. And so we'd get calls for these 7A loans that were variable rate, and they're loving life when rates were, down 3 to 4%. But with the rising rate environment, we've been seeing more and more of these loans where the borrowers are like, okay, we got a really good period of low rates, but we need to lock this in long term. So SBA, when it isn't a 7A loan, we have to determine if it's the same bank or credit union that's looking to refinance a loan already on their books, or if we're looking to refinance and change lenders. And there's different rules for each. We just have to verify if, in the case of it's the same institution debt, the third-party lender, CDC, we can only refinance if they're unable to modify terms. And so the SBA also wants to know and confirm if the loan's been sold on the secondary market. So, and that's one thing we work with you and the borrower to determine if the existing lender is able to or not modify the terms. Other conditions, requirements. So one thing, SBA, the business does have to be in operations for 2 years. So we only have to wait 6 months to refinance a loan that's been in place, but the business does have to be around for at least 2 years. That would be the case of a startup that got a conventional loan, but then was looking within 6 months to refinance. That would not be eligible. What is allowed, like we talked about, land, building, equipment, machinery, any improvements to the property, those are all eligible assets. So if the loan was to renovate, that's eligible. If it was to add on, expand. Loan to value, just to confirm, 90% loan to value if there's no cash out, 85% if there is cash back. Looking at a project, we get the appraised value and we'll see how much that gives us. If we're doing cash back, we first look at, okay, we need 15% equity to stay, and how much from there between the debt and equity can we tap into cash, and then we can determine if we can max out the 20%. Okay, for a new 504, if someone's looking to purchase a hotel or an assisted living center or a gas station, SBA considers those locations as special use. And so for new purchases, that's 15% down. With refinance, thankfully, SBA did away with special use. And so there's not ever an occasion. So if we're refinancing a hotel, a golf course, a gravel pit, an assisted living center, all of those are still just, they need 10% equity. And so that makes it very easy for us. We don't have to deal with it. And then it gives you a very straightforward understanding of, okay, here's the down payment requirement for refinance. We're going to take a promotional timeout to refresh the presenter host. Brought to you by Mountain West Small Business Finance. Continuing on, other conditions, requirements, like a new 504, the business has to occupy the space. SBA's reason for that is they want these buildings for the small business. And so they see that as 51% of the space. So we verify occupancy through the appraisal. And so if a borrower is under 51%, they would be ineligible unless we can show that they're able to occupy space through a tenant leaving or something like that. Another example, so again, a lot of times the appraisal will let us know what we can do. So with this project, it's 5 million, the appraised value. So we're like, okay, we got 5 million, but the refinance, they owe 4.4 million. So instantly that kind of gives us not a lot of room for cash back. We have to show at least 10% equity, so 500,000. In this case, that does leave 100,000. I put closing costs, but that could also be cash back or cover anything between their soft costs. With that, as a reminder, on the SBA portion, we cannot lend more than 40% of the project, and we also cannot lend more than the bank or credit union, a third-party lender. So those are the two limits we always have when breaking down a loan. In this instance, it's 2.5 million for the lender, 2 million for the SBA, and then the 500,000 from the borrower confirmed by the appraisal. So down payments confirmed up front. Another example, again, sometimes it's helpful to just see the numbers. Most typical, like refinances we've had lately, dental office, they've been operating in for a long time. They had a rate that was adjusting. So it was a good time for their banker to say, okay, we can readjust based off of what we've got, which is typically, prime +2. But with rates going up, the option of hedging and getting half your money on a 25-year fixed rate becomes more and more appealing. So with this project, 1.5 million, the refinance was $1 million, so it appraised at 1.5. Their equity 225,000 to confirm, and they just wanted to cash out 275,000. In this example, the lenders at 675,000, SBA would be at 600,000, and the borrower rejection would be 225,000. One option, looking at this, the SBA has a new ALP Express program. And so with some flexibility on costs, if the SBA portion is under 500,000, then the ALP Express is a designation we have as a CDC where we review and essentially approve the credit in-house, but then send the loan off to SBA and they approve the eligibility or confirm. It's made to be it's intended to be under a week approval time. It's intended to speed up the loan process. So that's something we're excited about because we see 35% of our projects fitting in that category. Talking about refinance, you may be convinced, maybe you're not convinced. Let's see if this gets you over the hump. So, best parts of the refinance. Fixed rate for 25 years. So SBA locks you in, they get half their funds fixed, and then as a lender, you can fix it to whatever your standards are. You can do the 3 or 5 year or 10 or 25. SBA just requires you have at least a 10-year call if we go 25. Borrowers can get up to 20% cash back of appraised value. We can now refinance SBA debt with the SBA 504. There's no special use. Anyone and everyone, especially those hotels, assisted living centers, can refinance up to 90%. So in a rising rate environment, 504 helps you, the borrower, feel safe and warm. And the current rate right now is 5.43%. And as our friend Paul Rudd said, that's really impressive. But wait, there's more. So we talked about 504 without expansion. So now the other SBA option, 504 with expansion. The one thing missing, as you may have noticed, you can do cash back, but SBA did not have an improvements or a construction or addition component to that regular refinance. And so this is the option if someone's looking to add on to their facility, redo it, purchase it, one restaurant, looking to buy another restaurant, or so we can, One example is we did a quick lube. They had debt on it and they wanted to buy another one. And so we were able to refinance their existing location and then wrap it in with the one they're purchasing. So here's the big overview of refinance with expansion. It is dictated by the cost of the expansion. And that's buying a new building, building a new building, buying equipment, whatever that dollar amount plus any lender fees, soft costs, engineering, architect fees, whatever that total dollar amount is. If it's $1 million for that expansion, we can refinance up to $1 million. So that's how SBA has worked out this product. If they're looking to buy a $500,000 CNC machine, we can refinance any other equipment up to $500,000. If they're looking to purchase another building for a dental practice and it's 1.5 million, that's the expansion. So we can refinance up to 1.5 million. Eligible project costs. So what goes into that expansion project? Eligible debt refinance. So we're looking at everything that would be a traditional SBA 504: land, building, new construction, equipment, renovation. But along with that, any costs associated with that new purchase or expansion. So we can add in architect fees, engineering, survey, closing costs, lender fees, anything that goes into that becomes eligible. Furniture, fixtures. And then the refinance again is we can go up to the amount of those expansion costs. The best part. So these projects we love doing because a lot of times businesses will look at, okay, like the quick lube example, they're running an operation and then they're looking at, okay, what's it going to cost me for down payment to get this other building? You know, if it's $1 million, $2 million, that's 100,000, 200,000, or if it's special use, you're looking at 150,000. And so 15%. With the expansion refinance, if we can refinance their existing debt, we can use the equity in that building. And that is the way we can leverage and get them into their second building or expansion without any down payment. So those work out pretty great. Anytime we can refinance the existing debt, tap in their equity, it's SBA's way to not have to require cash down. And so anytime we can make this happen, we love doing it. Here's an example of a breakdown of a refinance and expansion. So again, the expansion costs dictate what we can do with refinance. So I always look at, okay, what's it going to be to expand? And this one, they're looking at $1,125,000 to expand, buy a new building. And so our required equity of that, $250,000, what's available, but we can refinance up to $1,125,000. So that's how it always works. What the expansion is, and then what the refinance will max out at. And the breakdown on the right side, you'll see the lender is at 50%, SBA, the most we can do is 40%, the borrower injection, $250,000, 10% of that. Again, as we discuss these, if you have any questions, send them. Danny's monitoring the chat room. And so anything you've got, if you've got a project right now that you have that you're looking at a refinance, and you're trying to see how it fits into this, send Danny a note. You know, he can talk to you after. We can have one of the loan officers talk through the details and see if this would be an option. For any project you have, we prepare a project cost sheet, which gives you that breakdown of what we just looked at. And so SBA is really great. It's pretty concrete in what we can do, what the SBA allows. So you can always present it and show them, okay, here's how it would look if the SBA was involved. With refinance, we mentioned earlier the 85% that the original loan we're refinancing was for land building equipment. SBA has some leeway if there was any business acquisition or something else involved, but they want to know that the note we're refinancing, 85% of it was for that building they're in or the equipment they own. Eligibility, again, like any 504 loan, we have to show SBA that it's eligible, that they'll occupy 51% of the space, or they're using the equipment for business purposes. If it's a 504 being refinanced, we have to refinance the bank's portion and the SBA portion. SBA will not let us do just the lender. For a 7A, loan can be refinanced if the current lender is unwilling or unable to modify. And so that is something we have to get a letter from that lender or some confirmation that they cannot modify their loan. And if it's same institution debt, if you're looking to refinance a loan that's on your books, then the same thing, look to see if you're not able to modify or if it's been sold on the secondary market. So what can be included, what's really nice, any fees, cost of the loan, and prepayment penalties, those can all be wrapped in part of it. What we have to show to SBA on this loan, or I mentioned when these loans were approved by Congress, these loan refinance options, they have a couple things that just don't coincide. On this expansion refinance, we have to show that the refinance is there's a benefit to the borrower. And so it can be an improvement to cash. The loan has a balloon payment, or if it's seasonal, especially now with rising rates, we're able to show it's a variable rate, and now the loan payment's going up. So that's something we do on our side. That's required by SBA. We have to get 12 months payment history. We just show that they've been making their payments, that they're current, and no late payments over 30 days. We work with you, the borrower. We'd like to get up front just to make sure the last 12 months, just so nothing surprises us. But then right before we submit to SBA, we'll pull and ask for a new 12-month just so we've got the current 12 for SBA. They do require that on all projects. Now, again, we work as a third-party lender. We just confirm with you. These are some things we send on to SBA. Da, 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 da. We have reached the conclusion of the refinance webinar. I hope it was one of the best you've had within the last couple months or weeks or today. With that, if you were following along and if you noticed the asterisks, there were some subtle hints and details about me and my life and my favorites. And so first 5 people right now that could send comments to Danny Mangum about the favorite thing you learned about me today will earn a free pair of Pit Viper sunglasses, today's sponsor. So we'd like to thank our sponsor. We'd like to thank Mountain West for hosting, for Judd Blakesley and Tyler Healy for not being here. And for those first 5 that got correct Judd Blakesley preferences mentioned in today's webinar, you'll win your choice of a Pit Viper sunglass. Thank you. We hope we answered most or all or some of your questions. If you have a project, please reach out. We love, our favorite thing is to be able to just talk to you about it, and we can discuss it over the phone. And then if it sounds like it's a 504, we want to give you the details to take back to the borrower to show them the option. So Danny, if we got our winners, then I think this concludes my portion of the presentation.
We do have our winners. We're going to have to make the executive decision to increase the amount of prizes to be given away, because I feel like non-Mountain West employees should, the first 5 non-Mountain West employees should receive a benefit.
Oh, and then the Mountain
And
West.
then also do something for the Mountain West employees also. So we
that's
might
great.
have to do like an Oprah,
Look
you
under
get
your-
a prize, you get a prize.
Well, I'll talk to our sponsor, Pit Viper, and see what we can work out. But
Perfect, perfect. Yeah, great participation here. Erwin would like to point out that Judd beat him in pickleball. So I don't know if that was one of the asterisks that I missed, but thank you so much, everybody, for your participation. Our next, I don't have the agenda in front of me for the next one, so we'll communicate that out via constant contact. But this will be posted here pretty soon to our YouTube page, and we'll also send it out to all attendees. So thanks, Judd, for hosting. Sorry, Tyler, we didn't have time to talk to you, just kind of like Matt Damon on the Jimmy Kimmel show. But thank you everyone for participating and listening to today's training. We'll talk to you later.
thanks.